Hi, this is James Shrug with Westpac London's end of day report for Wednesday, October the 10th. Another down day in Europe, the trigger today being weaker Chinese auto sales. That on top of yesterday's IMF report downgrading the global growth outlook and citing Europe as the biggest risk to global financial stability has continued to reverberate around markets as well. There's no fresh news regarding Greece and whether or not they'll get the next bailout tranche. There's a Franco-Spanish summit going on today between the French and Spanish leaders at a time when concern about the Spanish budget position has intensified, although the Italians managed to announce a couple of cuts, or a cut to income tax for lower income earners, and a lower than anticipated increase in sales tax, reflecting some success there apparently in meeting their budget deficit reduction targets. They're talking about it in Italy, balancing the structural budget next year, and they say they're going to meet that goal. There was no major US economic data today, just wholesale inventory figures which posted in line with expectations, 0.5% rise. We had earnings reports, of course, start to come through yesterday. Alcoa beat analysts' expectations in that their latest quarterly loss wasn't as big as analysts expected, but comments by the CEO downgrading his expectation for aluminium demand subsequently saw the share price, which initially spiked on the earnings result, saw the Alcoa share price fall back. Other firms reported interesting tidbits. Cummins, the diesel engine maker, expects capital equipment investment to decline going forward, and that they expect that to hit their results in coming quarters, and that's consistent with the view that firms are cutting back on business investment as concerns about the global growth environment intensify. So other corporates worth mentioning, the EAD's BAE merger is not going to go ahead, with the German politics sort of cited as the main reason for that. Basically national self-interest conflicted with the strategic intentions of the two firms, which meant that the merger just wouldn't be successful if it had gone ahead in line with the conditions imposed by the various governments, UK, France, Germany, involved in the approval process. So that's it in terms of major news. In terms of markets today then, the London market, about an hour ahead of the close, is down 0.3%. The French market down 0.2%. Germans are off 0.2% as well. The Spanish market's down 0.75%, and the Italians are down 0.2%. And the Dow, an hour or so into trading, is off 0.3%. It's at 13,431. Commodity markets, not too much change there. Gold and copper unchanged. Oil prices up 0.4% at $92.78 a barrel. The Aussie dollar, it's at 1.025 at the moment. It's up about 0.5% from where it fell late yesterday. Well, from 1.025 late London trading, lost about 0.5%, just under 1.02. It's regained that lost ground so far during the London session, despite the generally gloomy global growth story and the softer equity market story, which implies risk aversion is continuing to increase. And we've got employment and unemployment figures coming out in Australia today. We're looking for an increase in jobs and a slightly higher unemployment rate than the 5.1% it fell to in the August figures. Unemployment expectations and inflation expectations figures also out in Sydney. Okay, that's it for today. I'll be back tomorrow.